Hey, folks. Welcome to a weekend technical analysis update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, May 10th through Friday, May 14th, 2010. What a week it was last week, folks. As you can see from the daily SPY chart here, the markets flushed major to the downside. And again, we're talking about a drop of literally from the 52-week highs to the lows of the year 2010 of approximately, I would say, give or take around 14-15%. And that's again in literally a week and 2 days. Now, what are we talking about here? What's the culprit on the backdrop of this market? Right now, it's all about Greece and Europe. The euro is collapsing. The euro has been collapsing as Greece is in chaos, riots. The Greece economy is just faltering here. They have to do this big austerity plan, cutting all the public service programs. And again, people are not happy. Now, the problem is it's not just Greece, all right? They formulated a bailout plan for Greece at this point, 145 billion. But bottom line is, a lot of people don't even think that's going to be enough. And not only is that not enough, but then you have to look to Portugal, to Spain, to Italy, to Ireland, to Belgium. All these other countries are at risk of defaulting as well over the next multi-month period. So again, it's not as easy as just bailing out one country. Yeah, that's a band-aid, but you're putting a band-aid on something that's infected. It's not going to solve the problem. All right? So that's the big issue here. That's the real reason why the markets have faltered here in the last 2 weeks. And again, just looking at that daily chart, from the February 5th, 2010 low here, you had a nice bottoming tail, and you just rose consistently all the way up here till we got to the highs literally a couple weeks ago. Then what happened, folks? This was the key. It all started on this date right here on the 19th of April. Why? Because we actually broke below this trend line, but you never confirmed. And again, the confirmation signal is one of the master methodology techniques in the money stocks to understand when the markets are going to fall. And I'm going to show you exactly how we knew this market was going to fall and pegged it to the day, literally, for the rollover to start. And again, 15% fall on the back of that. Now, after you close below this, that was step one, but you never confirmed to the downside, and you went up 1, 2, pause 3, 4, and 5 days here, going all the way into the 26th of April. Now, from the 26th of April, which I believe was a Monday, to the 27th, which was a Tuesday, you had a 1 down day, 2 down day. That confirmed the confirmation in the money stocks methodology signal. And as soon as we saw that, we said to ourselves and we said to our members, this market has confirmed to the downside. This market is done. Top is in now. Look for downside. And in addition, we said every bounce from this point out can be shorted. So sure enough, the next couple days right here, the 1-2 day bounce, everyone that knows that, you have a little in spirit of bear flag, sharp down move up inside bars right there. And again, every bounce, as we said, could be shorted. Market got pounded down, bounced, and then really started to drop. And again, this week alone, you basically dropped about, I believe it's about 5% on the markets or more even from where the markets opened the week to where they closed. And again, if you take a low of 105 on the SPY, it was much more than that at this point. Now, Thursday again can be up for debate. People are talking again about possibly a trader doing something where he put in $1 billion instead of $1 million. That's kind of nonsense in our opinion. That did not happen, folks. Ultimately, what happened here was you had New York Stock Exchange pulling away from the market at the point when the market was dumping in the beginning of that fall around 2:30 to 3 p.m. Eastern on Thursday. When they pulled away, it took all the liquidity out of the market. So again, even on stocks like Procter & Gamble, and if we bring up PG, you can see what happened here. PG went all the way down to about $39 at one point from about $60. But the key here again was when the New York Stock Exchange pulled all their bids away to stall the market and try to help the market from dumping out because too much of a drop was occurring. And at this point, the markets on that day were down about 5%. Then all of a sudden, when ECNs, which are electronic routes, were hitting the market, there was just no selling, bids on the bid side or offers on the sell side, and the market just flushed down. Again, think about this: it's almost like trading a small cap. Procter and Gamble essentially became as thin as a small cap, where if you sell 10,000 on the market or at the market, you're just going to wipe the stock price down $5 for 10,000 shares or thereabouts. And again, that's just an example of what was going on there, but that's really what caused that continued move down, and it ultimately was a short-term crash. I mean, you had the Dow down about 1,000 points there intraday. Now, the market obviously recovered. Plunge protection team came in. We all know about that at this point, or as they're called, the President's Working Group. They're going to prop the market up. Once things started to stabilize, people rushed back in, realizing what had gone on. Also, the algorithms and stuff stuff like that. Flash trading, black box programs are also to blame, as they can also be pulled away from the market. These flash programs are constantly trading back and forth every intra microsecond, and as soon as they hit certain levels, or the market hits certain levels, and things are too volatile, they will pull away from the market as well, and that just negates all volume in the market. So again, for that split second there, you saw a massive drop as everyone just kind of pulled away, except for a few individuals, and sure enough, a lot of stops, a lot of amateurs were hurt here, because let's say you bought Procter & Gamble and you were holding it for the last year or so with a stop at, let's say, $50. Well, guess what? The stock never closed down there, but in that microsecond, you flushed all the way down through $50. Your stop got taken out, and again, it went all the way down, but then bounced all the way back up. So, I mean, imagine people's stops all the way in this range just getting wiped out, and all of a sudden, you have a loss on that Procter & Gamble when it really closed back above $60 for the day on Thursday, and again, down a little bit on Friday, as we can see. So that was a big issue on last week, and again, if that type of thing should not happen again, part of the reason is you can believe that Bernanke, Treasury Secretary Geithner, even Obama probably went to the New York Stock Exchange and said, hey guys, do not pull away from the market again. You can't have that type of situation where you have a intra, 5-minute drop on the Dow of 500 points from when it was down 500 to down 1,000. Can't have that. Don't do it. And ultimately, on Friday, I was correct. I said that to my members, and you did not have that type of event happening. In fact, if we go back to the SPY and go to the intraday, you can see there was some volatility. I mean, it was a wide volatility type day, but the markets ultimately ended kind of choppy sideways here to the downside. And again, the markets did end sharply lower, about 1.5% to 2% down on Friday, but considering what we went through on Thursday, that was actually somewhat of a small-term victory. And again, now the question becomes, what happens next week? How do things progress next week? Where do we see this market go? Are we going to see more selling? Are we going to see some buying, rebounding in the market? And again, overall, looking at the charts, again, if you go to the daily chart, you are on the 200 moving average right here. Here's your 200. You hit it again on Friday, bounced up. That's generally known as support. As long as you stay above that, I think this market does hold up and could get a little bit of a bounce early in the week, but we'll have to watch and see how that plays out in the coming early sessions next week. And again, a lot of this has to do with what's going to happen with Greece, all right? And I mean that specifically, folks, to Europe and Greece. If you have over the weekend, and again, as I do this weekend video, it doesn't seem like there's been any new events, but again, we still have Sunday to get through, and then Monday morning early before the market opens. But as of now, anyways, it does not seem like there's any big negatives going on there, at least as of now. And again, should something happen, this market could easily sell another 3% down early in the week. But my guess is you're going to have people making statements, big people over in Europe, also in the United States, trying to calm the markets. And again, PPT should be out in full force at this point. And again, that's the plunge protection team, making sure that the market does not continue its downward spiral, at least in the near term. All right, so keep an eye on volume. Volume last week was insane, folks. Thursday and Friday volume combined for over 1 billion on the SPY. We had days over the last 3 months since the February 5th low, and again, I'll put that up. This low here, we did basically 100 million for the day on multiple occasions. Just think about that. 100 million for the day, and then in 2 days you do 1.2 billion or 1.3 billion. I mean, it is insane, the volume. This is the same type of volume that we saw going all the way back, and I can put this on here. Take a look at this. All the way back to 2008. All right, let's go all the way back. Here's 2008. Let's punch it up. There you go. Right there. So again, it just shows you how crazy the markets are. It's very reminiscent of late 2008 in October and November. This is the same line of volume. And again, since that pivot point, you have not done that type of volume. And again, that's very telling of institutional dumping going on, folks. And again, I talked about this a lot in previous weekend videos and free videos even, how when the markets are floating up, there's no volume. That was telling us, that was a direct indicator that the market was not being bought by institutions. Whenever a sell day would happen, it would be on heavy volume. That means institutions are dumping. And again, I warned this. We warned this here in the Money Stocks. We told you guys this was going to happen, and ultimately it did happen. Beautiful for our traders and our research center members, as again, they cleaned up on a lot of these ETFs. You saw ETFs like EDZ go basically from 30 to high 30s to as close to here on the dump day of $60. I mean, just think about that, 59, $60 here, even a little bit above 60. I mean, ultimately you're talking about 50% plus, 60%, 70% gains on a lot of these ETFs. Even the VXX, talk about the VXX here. The VXX went from about a week or two ago from $18 or so, now all the way on Thursday hitting a high of about $31, $32. You're almost talking about 100% gain in many of these ETFs. And again, research center members that were holding this stuff really made out like champs over the last week or so in this market. Now again, you can join the research center. And by the way, I wanted to announce we do have the alerts up now. And again, this is a big thing. You have text message alerts. So anytime the chief market strategist buys something or sells something or give an alert out on the hot charts and alerts, Pro Trader Watch list, Hidden Gems. Let's say the Hidden Gems are put out or whatever. You will get, if you sign up for it, you will get a text message alerting you to go check the website right away. This is going to increase the profitability of everyone in the research center, as you'll get the alerts much faster as the chief market strategists start maneuvering in and out of this wild market and continue making big dollars across the board. All right, going back, guys, a couple stocks to quick look at. First of all, gold has ripped higher quite a bit. If you go to the daily chart of gold, gold has taken off. This is a fear play. The dollar's been going higher, so you know it's not the dollar going down that's causing gold to go up. This is pure and simple fear. As printing of money continues, as collapses and defaults look more and more likely, gold is the safest place to be at this point, and that continues to skyrocket. Now, it's getting extended, no doubt about it, but I don't necessarily think it's going to pull back in a major way or at all. Keep that in mind. The USO has been crushed here. Oil dropping huge last week, as again, overall, it looks like the economy of the globe will have a harder time recovering demand. That's a demand issue. Also, the dollar going up puts pressure on that as well. If we go to the dollar, take a look at this, guys. Major move last week in the dollar, as again, all this problem in Europe is causing the euro to drop and the dollar to rise substantially. Now, up here, you do expect to have a little resistance. We'll see if we continue the pullback. I had called for a pullback on Friday, and sure enough, we did get that. The question is, does it continue even more so? Again, that news and key data is released in the Research Center, hot charts and alerts, and again in the nightly videos and everything that we do have there to give you guys the up-to-date stuff. All right? So again, folks, this